Today's edition of Back Roads of Illinois. We are bringing you lasted for farming sources and information sponsored by AgriGold. I am Cesar Delgado. I am your host for today on Back Roads of Illinois. We're glad you're here for today. We were talking about what's impact on the tariffs for farmers in the Midwest, like in Illinois, Iowa. We were talking about that tedsal in Morris, Illinois. Then we were talking about the commodities markets with John Heinberg from TotalFarmMarketing.com. This week is pretty busy, but it won't be short week. Otherwise, this is your rural news sponsored by AgriGold. This week from Brazil, it's drier more than expected in the northern part of Brazil. The beans production is down in Mato Grosso for right now. The U.S. Nomination Secretary of Agriculture will be testimonial on today. Brooke Rollins will be confirmed by the Senate Ag committees for right now. In Louisiana, Alabama, Florida, there was a blizzard warning for this week in Louisiana. There was 10 inches in New Orleans. This been your rural news on Back Roads of Illinois. This is your commodity markets for this afternoon, sponsored by Kyle Bumstead. He's your commodity broker from Allendale Incorporated. Corn futures is up at 5 to 10 cents on the quarter. Soybean futures is down at 8 to 6 cents. Wheat futures is unchanged for today at 5.54. Let's take a look for the livestock markets on this afternoon. Cattle is up at 3 to 5 cents. Feeder cattle is up at 9 to 5 cents. Lean hogs is down at 5 to 4 cents. This been your commodity markets for this afternoon, sponsored by Kyle Bumstead from Allendale Incorporated. We were talking about what's impact on the tariffs for farmers in the Midwest, like in Illinois, Iowa. We were talking about that tedsal in Morris, Illinois. How are you today? Tom, how are you today? Let's discuss about the agricultural trade. Could you tell us about that?
Well, first off, I'm doing fine today, Caesar. Even though it's another cold, snowy February morning, but that's what to expect in the state of Illinois. So far, spent the morning cleaning out the snow from neighbors. I have some elderly neighbors that I take care of. So if we want to get to the topic that you and I talked about on ag trade, one thing I've been particularly happy with is the markets have, actually gained some traction since the last report. So I just looked up cash bids here in Morris for July and December for corn. And we're seeing July corn cash at $4.94, so that's awful close to $5. And December is $4.49. So we've come a long way since the fall of 2024 on corn. Beans have also gained, but not the gain that I see in corn. July cash here is $10.82, way better than the 966 that I saw in the fall. And December beans cash are 1047. So like the direction that the markets have gone to, especially being a banker and doing cash flows and customer updates, and our 2025 projected cash flows are not very pretty, using farm doc projected prices of 425 for corn and 1025 for beans.
What is the importance of free trade with other countries like in China? And
when farmers make money, they know how to spend it.
how is the input for right now to the farm, Tom?
Well, what I've seen in doing cash flows for 2025, we're not seeing a drop in the input costs. And you take, that with the drop in income. So we have lower income, steadier, higher, input costs. That's affecting the bottom line for these farmers in 2025. So, and it doesn't look like we're going to see these input costs, go down. So the focus has to be is, raise these grain prices, hopefully, and it has happened, and hopefully we can get it to continue. But I'm worried that this trade talk with tariffs could put a dent in the direction that we've had the last month or so in the grain market.
Do you have any final thoughts on the tariffs and the commodities markets?
Well, my final thoughts are, is leave them alone. Right now they're working, it's supply and demand. The report came out and corn yields, were not what they thought. Bean yields were great. Illinois set a record. The farm I had the best beans overall that I've ever had. So I helped Illinois hit that record. That's what I tell everybody. So, but I'm concerned right now, if tariffs are put in place on the ag commodities, that the countries will turn around and do retribution for that, and that is going to, I think, affect the price that we currently have out there in the markets.
Yeah, it is a pretty simple solution, but we will see for next couple weeks.
Yes, I agree with you on that, and it seems like they backed off, on the tariffs, so they haven't immediately implemented them like we were told, before the election. Now the number I see, at 10% compared to 60%, that's a lot lower than what they were saying. But I'd like to see that number come out to be 0, to be honest with you.
Thanks, Tom.
You are most welcome, Caesar. Appreciate you having me on your podcast, and wish you the best.
This is Tom Tedsal from Morris. Illinois on back roads of Illinois. We were talking about the commodities markets for today with John Heinberg from TotalFarmMarketing.com. Hey, John, how are you today?
I'm
Let's
doing well.
discuss
I'm doing well.
about the commodities markets, especially in the corn markets. What is the fundamental to the grains?
Yeah, as I said, I'm doing well here, so appreciate the opportunity to speak with you again today. Obviously we've had some pretty good strength in the grain markets here, continuing today. Actually yesterday looked like we wanted to turn things over a little bit. Market just kind of denied that and kicked right through to new highs again today for both corn and soybeans. So we're seeing some just good money flow into the grain markets. Again, a lot of this is triggered after USDA made those large cuts in terms of the corn yield on the January report, bringing that carryout down to a very tighter 1.54 billion bushels. Now the focus is going to be on the demand. Does the demand slow down here at these price levels? Does it stay consistent here? Does that 154 get smaller? There's a lot of moving parts right now in the grain side of things here too, and that's really got people kind of scratching their heads in terms of how far this rally could go, when the rally can end, if it does end. Those things are in play. Obviously, throw in there that South American weather, what's going on with government policy regarding the biofuels. That's helping fire up some of the bean markets in a little bit, or putting some pressure once in a while in the bean market, like yesterday. Just a lot of moving pieces going on right now. Probably the only quiet piece here though is the wheat market, just basically kind of following suit and just observer today while all the fireworks were corn and soybeans.
How is the beans futures for April contract for this afternoon, John?
Yeah, the market's traded nicely higher. Did fade off of a really strong gain, though. We were pushing well into double digits higher. Finished 9 cents higher on the front end side of the contract. Again, reflective of what's going on in that South American weather. It's a little bit more than just the dryness in Argentina and southern Brazil. It's also some of the wetness concerns that may be slowing harvest down in those key growing regions of Mato Grosso. Some of those beans aren't getting to the ports, causing some issues there. It's causing bean prices to rise a little bit in that regard. Plus, just some other things that are going on geopolitically with China possibly putting some restrictions on some quality standards for Brazil beans. Just a lot of little moving pieces right now that's just keeping the money moving into the front end of the market. That domestic usage, to help use up those supplies of U.S. beans as well as some corn.
Of course, John, we will see for next couple months.
Yes, very much so. In terms of that's going to be probably a hot button topic as we watch in the marketplace and see what the direction is of the new administration.
How are things with the world wheat supply for right now?
Global wheat supply really is driven by the Russian price in terms of that nature. So obviously, we're watching a little bit about what's going on with the Russia-Ukraine war. Do we see a little bit of an end to that? That'll be something we'll have to keep an eye on if something were to happen. What would be the impact on wheat prices? It might be something that causes wheat prices to go a touch higher, just because Russia's been, fueling the war machine with their sales of wheat, been doing it at a lower price level just to kind of control the world market and keep wheat moving. If they don't need that, does that allow the free market maybe kick in a little bit more? Globally, we're still looking at a fairly decent supply of wheat. We obviously got production in many different regions. Australia looks like it's got a very good crop this year. Expectations for Europe to bump up its crop this year. The Russian wheat crop, Ukraine wheat crop had been dealing with some weather issues. So those are all little parts of it. Again, the U.S. is just not a strong enough player in the global wheat market to really dictate price. So for us, it comes down to being able to sell and move that product. The dollar being a factor there with that stronger dollar just makes it hard for us to compete on a global scale.
How is in the wheat markets for right now?
Again, the wheat market had a really strong day here just a couple days ago, but now it seemed to kind of flatten back out again. And like I said, today, even with the strength in the corn and soybean markets, was just kind of a non-player. So again, maybe it's still a little bit undervalued overall, especially in its relationship to corn in terms of price and the spread between corn and wheat. So that's something we may have to watch. Does wheat start moving itself into the feed ration side of it, replacing some corn because of its value? So, but right now the wheat market at least has got itself a bit of a short-term low in, and it's been building off that, but really not getting a whole lot of direction to the upside.
Can you tell us about the cattle markets for right now? How is the fundamental on the feeder cattle?
Strong market again this week. It looked like the market wanted to kind of roll over, and prices were trending softer, and then here comes cash trade again, as well as the relationship of futures to the feeder cash market as market jumped aggressively higher yesterday. Got some additional follow through buying here today on that strength of cash market. So we got a little bit of a breakout to the top side on the live cattle charts. As well as move higher quickly off these feeders into new highs. So it'll be interesting to see where the relationship's going to be going forward. Cattle on feed should show us fairly in line numbers with last year, but the cattle supply stays tight overall.
How is the Packers bid for this week?
So far, cash bids have turned up a little bit higher again, especially down in the south. We're seeing 201 to start the week. Then we had some 202 trades, so the trend was firmer there. Really hearing some strong localized bids in some of the auction houses that are out there. There seems to be a need for fat cattle, and obviously that's what's helping push prices higher as we got both February and April trading over the $200 level on today's close.
Do you have any final thoughts on this afternoon's markets for the weekend, John?
Right now we got a lot of value put back into the markets. Maybe it's still not where some producers need it to be, but at the same time, I think this is a window here, especially in the grains. If you haven't rewarded this rally with some cash sales, making sure you're looking at that or looking at put strategies to build some floor. If you don't want to pull the trigger on cash sales, this has been a nice move higher, kind of unexpected, but at the same time, the market's really put some value back in. And it makes me a little nervous when funds start getting extremely long, and they have gotten that way in corn. They've gotten that way in cattle. They're building to a long position in soybeans that when they decide to turn the other direction, it may not be because of anything fundamentally happening. So with that, take advantage of these markets that we got right now. Expect some volatility over the next handful of months as we're trying to figure out where policy is going to go. But be active in that cash market. If you got that opportunity to sell some bushels at higher prices, take advantage of it.
Thanks, John. We enjoyed our conversation. However, we got Ben Johnson from Detroit Lions.
So, well, good luck with that. Hopefully, he does a great job rebuilding the Chicago Bears. But it'll still be what it be.
This is John Heinberg from TotalFarmMarketing.com on back roads of Illinois. Thanks, Tom Tedsal and John Heinberger from Total Farm Marketing. You can listen to the show on YouTube and wherever you get your podcast. This has been Back Roads of Illinois. I am Cesar Delgado. You have a great day.